Hey everyone, welcome back. Welcome back to another session of a IC Markets webinar. Right, I just want to check if everyone is able to hear me well. I can see Samuel is tuned in from London. Awesome, Ramona's here too. We win. Jasek Polit, my biggest fan. I'm good, mate. Thanks, and nice to see you here. Nice to see you. Palita, Charles, Adam, nice to see you again. Helen, Tyler, Fabio, Uimana. Is that your first time here today? Right, Federico. Oh, Pascal, nice to see you here again. Arna, Alexander. Um, oh, Paschalis from Greece. Nice to see you. Luca from Stuttgart. This Germany, right? Awesome stuff, man. Right. Shem, nice to see you. Helen. Oh, Robin Shaker, nice to see you here too, man. Right. Okay, all good. Loud and clear. Loud and clear. Yeah. Hey, Angel. Is it Angel or Angel? Sounds a little bit Spanish, right? I think it's Spanish, right? Oh, Fabio, nice to see you, man. Ifiani, nice to see you too. Luis from Ghana, right? Graham, nice to see you. Nice, a lot of familiar names. Leon here too. Nick McGee, awesome stuff, right? Oh, Azam's from KL. I hope things are okay in Malaysia. I heard it just went to another another lockdown, like an extended MCO or something, right? It never ends, right? Guys, sorry, my webcam ain't working today, so today you'll be focusing a little bit more on my voice, I guess, right? And uh, and today's topic is gonna be on fundamental analysis. Yeah, I got a couple of you guys saying, yeah, thanks for reminding me to get my neck checked up. I actually got it checked up, right? And apparently it's the height of my monitor, right? I think the monitor is not supposed to be above the top of your monitor should not be above your eye level, right? So I kind of moved my monitor down a bit. Hopefully it's better today. Right, I think I'm too young to have neck problems. But anyway, guys, thanks for tuning in for today's fundamental analysis session, right? It's actually um, I think Suki, I'm gonna say, um, check your output, right? Okay, yeah. Today's session is not so much on doing fundamental analysis on the markets. In, Instead, it's on learning how to do fundamental analysis. So I'm curious, right? So I know my analysis tends to be primarily technical in nature, right? So I want to know how many of you guys actually use fundamental analysis in your day-to-day trading. Can you guys let me know? Oh, that's good, Suki. Oh, Adam, you do it all the time. Graham, what do you guys look at, right? For those of you guys who say you do, right? What do you guys look at? Tyler, right? Barely that's why you're here. Yeah, good stuff, man. Economic calendar, follow the news events, use them, try and learn, right? Adam does it all the time. Graham, Pascal does it all the time too. Mostly technical, but use fundamentals sometimes. Oh, macroeconomics of the countries. So, okay, interesting. Uh, Always watching for events and previous reactions. Check news events. Major news events like GDP, NFP, Forex Factory. Ed Ray, right? I can see your messages, right? There is no chat box. Rather, there is a message box where I can see all your messages come through. You're not able to see each other's messages yet because I think some privacy restrictions. Until we have some kind of live trading room, then we might be able to talk together. But for now, I'm able to see all the messages that you guys sent through. So don't worry about it, right? Yeah. Oh, Mohammed from Netherlands. No worries. I can see your messages. Yeah, Ifyani. Today, something buggy with my camera. So at least my mic is working. So usually on Tuesdays, sometimes yeah, my camera might be quite buggy or something. Right. So it's just my voice today. All right. So um, the 3-star news events you avoid, don't trade. Major events, use the news on my news on your charting software. So maybe it's Trading View. Is that Graham? I don't forecast news. I just watch and follow the movement. All right, that's a good idea. Yes, Hagarty, right? You can only see the IC markets screen, right? Today there's no video today, right? It's something buggy with my webcam. So tomorrow there'll be a video, right? Likely to be a video tomorrow, right? Today, for some reason I can't get my webcam to work. I might try later again if it can work. But yeah, so we're focusing a little bit on we're focusing a little bit more on my voice today, right? So guys, let us begin. All right, once again, a disclaimer, right? That everything in this webinar is going to be educational in nature, right? It's educational in nature. Do your own due diligence, right, before trading, right? Do your own due diligence, right? Nothing in this webinar should be construed as investment and trading advice, right? So yeah, important disclaimer as usual. Okay, awesome stuff. Now, guys, let's see your face so you know how serious you are. I guess most of the time I'm serious, right? Let me just see if I can just tune it on one more time. I'm not sure if it works. It's a bit buggy. Sometimes it turns on and sometimes it turns off. Are you guys able to see me? Oh, cool, it works. Yeah, good stuff, man. Good stuff. Right? Okay, my hair is still okay and stuff, right? Yeah, man. Right, I got my curtains closed today. Right, it's more chill. Yeah, used to me on screen. I need a haircut, man. I need a haircut. Now, I look like Jerry. Which Jerry? Like Tom and Jerry? Yeah. I tilt my head too much. I got like one screen is over here, and I got another screen all the way here. So it's very bad for my neck, and just like tilting back and forth all the time, right? So okay, Jackie Chan. I look like Jackie Chan. I I gotta take that as a compliment, I guess. Right, I like Jackie Chan. I like his acting. Right. But anyway, guys, um, our agenda for today, right? Yeah, I thought it's a different speaker. No, 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 no. Yeah, it's me. I wouldn't say a jack of all trades. I just highly sought after in many brokers, I guess, so to speak. Right. So yeah, today's session, our agenda, we're gonna take a quick look at fundamental analysis. Right. Today's session is more basic in nature, but I'm gonna cover the important basics for us to look at. All right. Right, I'm going to take a look at the economic calendar. What to look out for in the economic calendar? There's so much stuff to look out for in the economic calendar. So what do we focus on, right? Yeah, what do we focus on? And of course, a little Q&A session at the end. Once again, guys, introducing your host for today. That is me, in the flesh, Desmond Leong, right? So I run the award-winning research firm, Everest Fortune Group, and also the Forex Army, right? We're finalists for the 2019, 2020, and 2021 for Best FX and Best Equity Research. So we got a good, strong team of CFA, CMT, and CFT accredited traders. So yeah, our usual business revolves around advising banks, brokers, hedge funds on where the markets are heading. But we have a special partnership with IC Markets as external analysts that we're bringing you the institutional grade stuff, right? On how the institutions kind of look at the markets. It's very different. If you've attended our previous webinars, you notice that we take a very, very different way to analyzing the markets. Every Wednesday, we have our live analysis session, right? So it's an awesome session where we look at the markets together. I'll be making some big calls every Wednesday, which is tomorrow, same time, same place. You can find me here, taking on your requests, making big calls. For those of you guys who had attended last week's session, some calls we did on pound. I think it was pound yen worked out really, really well. So maybe I can take a quick look at it, show off. Hey, I need to show off once in a while because on the days where it doesn't work out well, people are coming with pitchforks and saying, hey, what happened? Right? So at least I'm able to do that, right? Yeah, pound Aussie. Yeah, Adam is saying pound Aussie worked out great, right? So I'm glad it worked out for you guys. So you've seen how I analyze the markets, very technical in nature. It's not to say that there's no space for fundamental analysis, but if you do technicals well, I think it's been 1, 2, 3 like consecutively, week after week after week, we've been getting really good calls. A lot of nice to see a couple of testimonials coming in saying that the the trading has picked up, hit rates have increased. That is music to my ears, man, and that is music to the ears of IC markets too. Okay, so anyway, right, you can find me on Instagram at the Comfy Desmond, right? Nothing much over there, just mainly me and my cat. Sometimes a little bit of me posting, when I'm playing FIFA. Any of you guys who play FIFA, ping me. I play FIFA all the time, right? So I can play together on the PlayStation, right? And then you can find me at the Forex Army, where yeah, find me at the Forex Army, where I build my bunch of crazy indicators and stuff, right? Good morning, Andre. Welcome to the show. All right. So now, without further ado, let's begin. Let's begin on what is fundamental analysis. All right. So, I guess like most of you guys kind of figured out, fundamental analysis, technical analysis and fundamental analysis are not mutually exclusive. Meaning that we can do technical analysis, we can do fundamental analysis. Even though my specialty is technical analysis, I do have a healthy respect for fundamental analysis, and I'll tell you why. Right. From a trading point of view, fundamental analysis can do, there are a few ways you can appreciate fundamental analysis, right? There's a way where you can learn to avoid it, and there's a way where you can learn to predict it. I have tried to predict it to very little success, right? I think that comes under the camp of econometrics, where you're trying to forecast what the what the non-farm payroll results are, the CPI, PMI, all these different economic news events, right? So it's very tough to do that. If you can forecast it well, you can forecast how the market is going to behave. I tend to stay away from that. So so let me just share with you before I begin the whole concept of fundamental analysis, how I incorporate fundamental analysis into my trading. So we all know fundamental analysis. Let me just see if I can pull up a chart here. Not so much of a chart, rather. So for fundamental analysis, where is that? Economic news calendar. Yeah, so IC market is going to help and resources, go to economic calendars, right? There's a nice little economic news calendar here where you can see all the upcoming news events that is going to happen, right? So so you can see that at 6 p.m. today, you adjust it to your GMT. So the great thing about IC markets Forex calendar is that it auto adjusts to your GMT, to your time zone. I can see that in roughly a 17 minutes from now, we're going to have an unemployment rate here, right? And of course, I get a little bit of actual, the forecast, the previous, all this kind of stuff here. But what I call this, right? What I call the unemployment rate, what I call all these news events, I call them the known unknown, meaning that I know it's coming, but I don't know the outcome. Now I'm going to repeat that again, right? All these are what I call known unknowns, right? It's a known event. I know it's coming exactly in 15 or 16 minutes time, but I do not know the outcome. Even if I think I know the outcome, I do not know how the markets might react to it, right? So these are what I call known unknowns. And known unknowns, if you are trading on the 15 minutes, 30 minutes, on the 1 hour charts especially, they affect your and you rely heavily on technical analysis. It kind of affects the probability of a trading the probability of a trading working out nicely or not nicely, right? It affects the odds a lot because any news event can cause the markets to stop you out, especially if you're on the lower time frame. So my first, I wouldn't say recommendation, but rather my first approach is that if you're trading on the smaller time frames and you're a technical analysis trader, right? One thing to watch out for, if you realize that the news events, you tend to get wiped out because of the weeks, the huge volatility that cause you to get stopped out and stuff, right? You might want to avoid these news events more in the approach of knowing that it's coming and avoiding being in the market when it comes, right? So you don't need to avoid every single news event, but what you probably want to avoid is like this. the ECB President Lagarde's speech, right? It's at 9:40. It's coming at this time. There's it is rate, meaning that it's gonna cause the markets to move a lot. There's a lot of volatility, so it's gonna come. So you kind of want to stay out of it when it comes, right? And once the volatility dies down a bit, then you look for positions again. So if you are a day trader, a scalper, right, and you realize that the markets are stopping you out quite a lot, that is one thing, right? Yeah, that is one thing that you can do to kind of avoid it, right? Really important question from Nick: do you enjoy all the ice cream? Yes, I enjoy. I ate a bit too much ice cream. I think I need to tilt the camera slightly higher because I think everyone can start to see my my stomach or something, right? Because I moved the screen down to match my the webcam to match my eye level, right? So now I can capture a little bit more of my stomach, so it doesn't help. Right. So Andre is saying that fundamental analysis is good for 1 year time frame. It depends whether it's not necessarily good for 1 year time frame. It depends on how you apply it, but it's usually good. It usually depends on how you apply it. On a day-to-day basis, if you try to forecast the news events and trade it, there are a lot of people doing that. It's like the wild west. It's pretty hard to do that. But if you can use the fundamental analysis and try to piece together the big picture of where the markets are heading, right, that will give you a better idea on how you can play it. And combine that with technicals to look for your entry. Combine it with technicals to look for a trend. If the fundamentals are saying is bullish, right, the trend technicals saying is bullish, you try to buy on dips, right. That is a good idea. That is the gold standard. If you guys attended last year's, I think, trading with Biden, trading the US elections, I made some really big calls on dollar CNH, right? The dollar index, the Aussie dollar. I made some very big calls on the IC markets webinar from a fundamental and technical point of view, right? It's the recording is there for you guys. I think if you go to more, click on webinar, right? And you go to previous webinars, right? So there are some webinars you can come in here. You watch Trading Biden, right? I actually did I think it's Trading Biden and the market analysis over here. I think it's Trading Biden, right? So I was sharing like some of the very big calls we were making for the year, right? From a fundamental perspective and technical perspective, right? They all worked out very well, and they were the reasons why we became the finalists on many of our awards, right? The best FX research, especially because we combine the fundamentals and technicals on the higher time frame, right? So you're talking about the lower time frame, it is possible, but I'm not such a big fan of it because it's a little bit hard to forecast, right? So we got a question from Fabio. Is it possible to use fundamental with leading indicators? Depends on what time frame, right? Personally, for fundamentals, fundamentals are pretty good for determining the momentum, right? Later I'll show you some of the key news events we will ideally watch out for, particularly revolving around interest rate decisions, non-farm payrolls, unemployment rates, all this kind of stuff. But usually they are just, if you don't try to trade it the moment it gets announced, but how you can combine it together with a trading strategy that tries to buy on the week, buy on the pullback, so that can play longer term in the direction from a technical and fundamental perspective. That I'll show you some ideas on that later. Got question from Ramona. How to know what news are super important, which ones are not? So Ramona, when you go to IC Markets economic calendar, I'm just gonna send it in the group chat over here, right? So the important ones, if you're gonna just, what's the word for it? If you're gonna just eyeball it, right? The important ones are usually revolve around those that are red in color. You scroll down, you see those that are red, you know that they're important. And you look at the currency that is beside it, right? So that is roughly the currency that affects, right? So this is a very important currency for the China yuan, right? This is a very important news announcement for Euro, and this is a very important news announcement for USD. All right, don't mention it, Ramona, right? Oh yeah, so that's a good point. Yeah, Fabio is saying that IC Markets has an indicator that puts news inside a tab on MT4. Go check it out. Right. Thanks for the tip, Fabio. Right. I think you guys should check it out too. So apparently, you can get the news directly within your MT4 if you don't want to load external website for it. Okay. We got a question coming in from Ed Ray saying, do we avoid fundamentals? No, we don't avoid fundamentals. I'll be showing you how to embrace fundamental analysis depending on your trading style. All right. So if you're yes, we can trade on fundamentals, but don't just trade it the moment you see the news announcement. So, oh, news announcements, unemployment is going up means that, interest rates should be dropping, right? And hence I will, I will buy, I'll sell the currency or something. It's not as straightforward as that. If you do that, you're just joining the herds of people that kind of try to dive into currency, um, try to follow the news and get kind of more or less get slaughtered, right? So stay out of that. Let me show you, and from an like I can't say I speak for everyone, but more or less from an institutional perspective, how we can kind of combine fundamentals with technicals, right? So for example, right? So if I was looking at like if I was looking at pound Aussie here, right? Okay, all right, you can see we actually caught this drop from for those of you guys 1 2 3 4 5 6 7 days ago. Pound Aussie, yeah, I think who was it to say that pound Aussie worked out very well. We're calling the drop from here with the stop loss just above this level, right? You can see how price touched it and reversed very nicely, right? So let's talk about it from this is a nice trade. Yeah, I might be boasting a bit. Adam, yeah, good profit, man. Right. So if we were looking at it from a fundamental perspective, right, and we were highlighting that maybe this is a big resistance to look at. So from so how I would look at this, right? Let me see where's my handy dandy G B P A U D, right? So for pound Aussie to drop, what must happen to the pound? Should the pound go up or down? Should Aussie go up or down? For pound Aussie to drop, what must happen? Do you guys want to take a guess? Right, that's a good point. Yeah. So Ramona saying GBP go down. Francis is saying GBP strengthen, right? So and Paul is saying Aussie go up. Either Aussie weakens. Nope, Francis, that's the other way around. uh, that's a good point, right? That's a good point, David. So yeah, David actually made a good point, which over here, I think there's yeah, there is usually a way to filter it. I think you need to go to maybe the economic news calendar on Forex Factory or something to filter it. But anyway, right? Exactly, Federico. Pound goes down, Aussie goes up, right? So for many of you guys, I noticed that you mentioned that pound must go down. Yeah, pound must go down. But it's not only pound going down. If pound goes down and Aussie also goes down, right? That means pound Aussie is neutral. It doesn't change, right? If pound weakens, but Aussie weakens even more than it. So I'm just going to do a simple math for you, right? Pound Aussie. Let's just say pound is, 10 over 10. Okay, this value is 1, right? 10 divided by 10 is 1. Let's just say pound weakens, right? Pound becomes 8. So it weakens by 2. Okay, but Aussie also weakens. Aussie weakens by 6, so it becomes 4. Okay, so your value here, right? Pound Aussie is not 1 anymore. Instead, pound Aussie becomes 2. So pound Aussie has actually strengthened even though pound has weakened. So can you see that it's not only about one currency weakening, right? It's about one currency weakening more than the other currency, right? So that's the concept of Forex. You're always betting one currency against the other. So it's not enough that pound must weaken. Pound must weaken more than Aussie. So it'll be most ideal, of course, if Aussie strengthens, right? So this is a case where pound weakens and Aussie weakens at the same time, right? Maybe we have an example where, we have an example over here, 10 over 10. Okay, remember this is 1. We are hoping for pound Aussie to weaken, remember, we're hoping for this value to drop. So let's just say pound drops by, let me just do a quick calculation. Okay, my math is so bad. Pound drops to 6. Okay, pound drops to 6. It drops by 4, right? So pound drops to 6, and Aussie strengthens to 12, right? So 6 beyond 12, this value of 1 becomes 0.5, right? So pound Aussie has in fact weakened. So the best case scenario is that pound weakens and Aussie strengthens. So remember, right? If you look at the currency and like, okay, yeah, I think pound is going to weaken, I'm going to short pound. It's not enough for you to say I'm going to short pound. You're going to say I'm going to short pound against another country. What country is likely to strengthen, right? So you look at the fundamentals and you see, okay, it looks like, the Aussie is starting to strengthen. So I'm going to short pound and buy Aussie, and equivalent, that it means you're going to short pound Aussie, you're going to sell pound Aussie. Now when you put that from a fundamental perspective, you're going to short pound Aussie, and you look at the charts, right? Look at the charts and you realize that this is a big resistance area over here. It lines up with my bias that pound Aussie is going to drop. Fundamentally pound Aussie is going to drop too. So that is how you increase the odds of you getting longer term trades correct, right? You line up the fundamentals and you line up the technicals. Okay, and at a very very basic level, that's what you should be doing. Yeah. Okay. Now so you're usually just betting one pair against the other pair. Okay, importantly, it's not enough that one currency weakens, you must find another currency that strengthens. Okay, find another currency that strengthens, and then you play against each other. Okay, that's the fundamentals of Forex. Now let's go on to our slide. Okay, so the economic calendar I showed you guys, I want to show you what to watch out for. Okay, one of the first things that you need to watch out for is these are the 5 things I'll be showing you. I'll be more or less breaking down in detail. It's going to be me. I wouldn't say it's going to be too wordy, but I'm just going to explain to you what it means. Okay, the first thing you should watch out for is the short-term interest rate of the country, because short-term interest rate, it tells us the strength of the currency, meaning that from the short-term interest rate you can decide whether how strong or how weak a country's currency might be, right? Because let's just say, okay, let me just explain it, right? Each central bank's board of directors controls the monetary policy of his country and the short-term interest rate, rate of interest. Banks kind of borrow from each other, right? So what happens in a recession, right? In a recession, the central banks tend to cut these interest rates, right? So that they can boost consumption, right? So imagine, right, cut interest rate is easier to borrow money, right? And it kind of encourages people to lend, to borrow money, encourages banks to lend out money. And now that it's so easy to get money, more it kind of injects money into the system. You can take that loan you've been looking for. You can take that, can borrow that money to spend. Okay, so that is the concept of why banks would cut interest rate. If if the economy is doing too well, so what happens is that the central banks will increase the interest rates to kind of curb inflation and borrowing. Okay, now I'm going to repeat that again. If the economy is doing really well, the central banks will increase interest rates to curb inflation and over borrowing. I hope this part is non-farm payroll always, that's correct, Pascal. Non-farm payroll always has huge momentum, right? So in normal circumstances, right, when looking at interest rate cut, if you ever see interest rate cut, right, that means you're looking at it go down, right? Anytime there's an interest rate cut, it kind of indicates that the economy is weak. Okay, it indicates that the economy is weak. So when you see an interest rate cut, the economy is usually weak. So now, guys, if you notice that the economy is weak, what are you going to do to that currency? You as a trader, what are you going to do to the currency if you see an interest rate cut? Yes, it's going to weaken, right? So it's telling me that you are reducing your interest rate because you want to stimulate spending, all that kind of stuff. Why do you want to do that, huh? Right? It's because your economy is weak. If your economy is weak, I'm getting the hell out of here. I'm going to short your currency. So in normal circumstances, that's what happens. All right. So the same thing that happened, if you notice that a currency is increasing its interest, all right. So it's telling me that the economy is doing well. It's telling me that the economy is doing well. And what it tells me is that, you're trying to curb over borrowing, you're trying to curb inflation. Your economy is doing well. I'm gonna buy your currency, right? So that's kind of how you can use the, anytime you see the interest rate cut or interest rate increasing, right? You hear it all the time. Central bank is cutting interest rates, central bank is increasing interest rates, right? You can use that as a gauge to understand, okay, this is what it means. Okay, yeah, you don't burn it. I can't sell it. Okay, so the next thing, so this is an example, right? So this is an example from in the past. The Federal Reserve, it had a like kind of dovish stance. During an interest rate news release, it announced that it was decreasing interest rate from 2% to 1.75%. So immediately after that, over the next few days, you can just see the markets just keep drifting lower, right? Because the first reaction of the market would that it have to turn bearish on the currency, right? So because it indicates economic weakness, right? So this is the dollar sink, of course, right? So the US dollar weakening. So yeah, important things to take note of, right? So yeah, usually kind of try to look for a pullback, but this is just on the chart itself. You're looking for the market to kind of go down, right? You're kind of looking for the currency to go down, to weaken. So the best kind of thing is that when one currency weaken, you look for another case where one currency is kind of strengthening, and then you can play a very nice short, or you can play a really nice buy. Yes, it usually has an impact on gold, Pascal. That's correct, right? So the next thing I want to touch on is labor market reports. So labor market reports, these are the main things that go into a labor market reports. There's everyone's favorite non-farm payroll. Kind of happens on the first Friday of the month. It's the most significant data report that traders focus on. So every first Friday of the month, keep a lookout. Usually it's on the first Friday of the month. Keep a lookout of it because it's usually a non-farm payroll report, right? So it's actually the non-farm payroll report is not responses from individuals. It's actually responses from companies, and it kind of shows the number of jobs gained or lost in the previous month, in the prior month, right? So just to get a gauge, the US kind of needs, I mean, now it's really, really different circumstances, but usually the US needs about 200,000 new jobs each month, just to offset kind of population growth, right? So an increase in the unemployment rate, it's a bad thing, right? So a decrease, is in the unemployment rate shows that the economy is doing well. So where is my mouse, man? Right. So these are two really, really big things to look at, right? If anything, right? The let me see your questions. It's more as a creations, it's not so much of the creations of jobs, but you see if there are less people who are unemployed, that means it's better, right? That means the more jobs are created and hence less people are left unemployed, means that the economy is doing well, right? And it kind of goes hand in hand with this thing called unemployment rate, because unemployment rate measures the number of individuals, right? So we're talking about this thing over here. Unemployment rate measures the number of individuals seeking work as a percentage of the existing, civilian, labor force. So it's also one of the super duper important things to take note of from a fundamental point of view, right? So one of the key things that central banks do, is they have to try their darnest best to keep a low level of unemployment rate, as low as possible. The lower it is, the better, right? So all your primary monetary policy decisions, are all centered around keeping unemployment rate low. So when you see there's unemployment rate high, it's not good. So what they're always trying to do is this thing called keeping the unemployment rate near the NAIRU level, right? So NAIRU. NAIRU stands for non-accelerating interest rate of unemployment. You don't need to remember it, right? It's about try to keep it about 4%, right? Now, yeah, central banks will, they'll try their best to increase, interest rate so that they can how do you put it, it's all designed to kind of, everything that the central bank does is to is to drive down unemployment rate. Okay, you just need to know that, yeah, unemployment rates are not good for the company, for the economy. Higher an increase, so not only a high, because I can say any unemployment rate is high, right? But if it's high month after month, yeah, it's nothing new. But if it was, if it was low previously and it shoot up high, this is more important than there being a high unemployment rate previously and it maintains at a high level, right? If it was low and it went up to high, then they'll be like, oh crap, right? There's a huge increase in the unemployment rate, right? We should be worried about this, right? So Pascal is a good question. In paying people now and don't go to work. Let me see if I can answer the question towards the end, right? So got Azam, does the currency strength index show the strength of economy? No, currency strength index doesn't show the strength of economy from a fundamental perspective. It shows it from, I believe it shows it from a technical perspective, right? Now, so we got questions saying whether is the fundamental news already priced in. I would say that a lot of people think that it's already priced in, right? But I think that if you're a firm believer of technical analysis, you will see that there is a lot of magic in technical analysis, right? You believe in a perfect market, right? Perfect information, right? Most of the things are already priced in. Whatever news you see here would have already been priced in, right? But personally, I think if you know how to use not lagging indicators but leading indicators, know how to use proper technical analysis, combine it with fundamentals, you can actually, it's not about whether it's being priced in or not, because even if it's priced in, there are still ways to play it. Okay, so we got a okay, I'm very wary of time, right? Oh wow, yeah, very wary of time. I still need to cover quite a number of stuff, right? So just let me go through them before I take on your questions later on, right? We got a question. So consumer level data reports. Okay, consumer level data reports are another super important thing for us to take a look at, right? So these reports actually account for, well, consumer spending, right? Given that personal consumption accounts for maybe 2/3 of, like most developed nations kind of economies, this data is super important. It's super important. It really impacts the economic outlook of a country, right? Because generally people, when an economy is doing well, what do, right? People tend to spend more money and they care less about saving. But if the economy is doing bad, right, you would think twice about going and spend on that latest fancy gadget, the latest Samsung phone, Apple phone, so this is a very good way to kind of get a gauge, an idea on how well economy is doing. If people are reducing their spending, then you know that maybe they're not so confident about the economy, right? So one way to measure that is the Consumer Confidence Index, right? So it's a monthly report. Sorry, my chest kind of hurts. Yeah, it's a monthly report, and it surveys kind of the households on their outlook on, what's the overall economic situation. So it kind of assesses whether consumers, are more likely to save or spend their money. So this report kind of covers the present situation and the expectations over the next 6 months, right? So the Consumer Confidence Index is a pretty important thing that you want to take a look at. So every time you see in the economic news announcements, right, you kind of just scroll around and you see like you see all the different news announcements coming in. This CPI means CPI is not Consumer Confidence Index. Yeah, GDP, CPI, where is it? I think we need to find it, right? But yeah, one of it will be CCI, Consumer Confidence Index. Yeah, all of these mean different things, and I don't want you to get consumer spending month to month. This is one way to measure it too, right? To see whether it is increasing or is decreasing. So consumer, when you click on it, it shows consumer spending reflects changing in spending month on month or previous month. So, like I mentioned earlier, consumer spending accounts for a large part of economic, activity. Higher than expected readings have a good positive impact. So the more people are spending money, yay, good. If people are not spending as much money, crap. That's all you kind of need to know. So it's, if you try to break it down, you try to yeah, see the central bank consumer confidence index is one of it. So which I was just sharing with you about. The more confident it is, the better, right? So these are important things to kind of it might sound confusing. The thing about forex, and they always try to make it all the jargons and stuff. It's unnecessarily confusing. But if you really break it down, you just realize that consumer confidence index is just to see how confident a consumer is in the economy. More confident, more spending. Less confident, less spending. What happens when you're less confident? The currency in the economy means that the economy might not do well, and it means that the currency would weaken. Easy peasy, lemon squeezy. I think, is that the saying? I'm not even sure. Right. So the next thing that I kind of want to take a look at is the retail sales. So same thing as retail sales is like an indicator on like personal spending in the US. So it covers almost every retail purchase made except automobile kind of purchases, like cars, right? So it focuses a lot more on the core numbers to get a kind of perspective on how the consumers are behaving, right? But one thing to take note of is that retail sales don't take into account external factors that might affect them. For example, during periods of typhoons, right? Consumers will spend less, if they have difficulties going out, right? So just because you have difficulties going out, doesn't mean that the economy is doing badly, right? So, in such situations, it kind of creates an illusion that the economy is doing badly when actually it's not that bad. So retail sales report, good, but you take it with a pinch of salt, right? So when you come in here, you notice that when it comes to stuff like the consumer CCI, the impact is high, right? When you're looking at stuff like maybe retail sales month on month, you see it's usually weak, okay, the yen one I guess is slightly higher, but it's not always a high impact news event. Most of the time is wide, is low or medium, right? Versus like consumer confidence. Oh, it's not scrolling for me. Yeah, versus like consumer confidence index, right? I need to find the right ones, but yeah, usually it's the conference board, not central bank. The conference board are usually a lot more high impact one. Joan is asking, how can one know what price levels institutions aim for when taking these fundamentals into account? You don't know, you will not know. But with technical analysis, with the correct kind of institutional grade technical analysis, which I teach you guys, and I've shown you guys week on week, there's a way that you can play the market properly, right? So it's not about trying to guess, it's about being as smart as the institutions when it comes to trading, right? If you've been through my previous webinars, right, you've been through some of the calls that we made on pound Aussie, we are calling for the drop on pound dollar, right? You can see how it's reversed from here very nicely. Everything there's a certain way to trade, which I need to show you guys how price has held nicely over gold, how price has held nicely over Bitcoin over here, all the calls that we're making, it's all a case of I just technical analysis alone already works well. If you know how to piece it together, fundamental analysis, even better. Okay. Now, yeah. So red, yellow, and so the different kind of colors here. Red means is high impact. Yellow means it's medium impact. See, yellow means it's they don't have it here, but yellow means it's medium impact. This gray means it's low impact. Okay. Now, what you can do is you can go to a site like Forex Factory, calendar. You go there, and you will notice that yellow means it's medium impact, red means it's high impact, and white means it's not so high impact. I actually love the Forex Factory economic calendar. It's very, very comprehensive. Anytime I want to read up a little bit more on it, you click this file, it actually opens and it explains a lot of stuff, right? So Forex Factory news calendar is pretty decent. Go check it out, right? But anyway, I don't want to digress too much, right? Durable, good orders, pretty good too. Consists of both consumption on individuals and kind of business levels, right? So do keep a lookout for it. But I do want to touch on business level data reports. So business level data reports, the one important one you look at is PMI, Purchasing Manager Index, right? So this kind of is a very good look at how businesses are faring in the economy at the enterprise level, because this affects a lot of the hiring decisions, a lot of the spending decisions, right? And if you analyze how the businesses are doing versus, it gives you a very good idea on how the economy is going to do. So the PMI is actually derived from surveys on this is called purchasing manager. So you think about it, purchasing manager. What does a purchasing manager do? They purchase stuff, right? So there's a survey that's handed out to all these important purchasing managers in the economy, and it asks them, hey, business, how do you think it's gonna go for next 6 months, right? So do you think you're gonna hire people? You're gonna reduce your workforce, right? And stuff like inventory orders. Do you think you're gonna buy more stuff, right? So you go to all the important these purchasing managers, these guys who make all the big purchasing decisions, right? And then you ask that for the outlook. If the majority of them say, hey, I'm gonna cut the stuff, right? Or maybe they say, oh, I'm going to hire more people. We're going to load up on more inventory. That is very good. Says that it's increasing. There's it looks like economy is going to do well. There's going to be more inventory. There's going to be more spending, and that the market is doing well. The economy is doing well, and hence the currency will improve. So that is what I need to know from a fundamental point of view. It sounds very confusing. PMI. People are saying throwing these numbers around, and you're looking at it and like, and you're thinking, what in the world does it mean, right? But if you just take a step back and just realize that, okay, purchasing manager index just says, essentially, it kind of just keep an eye above 50 or below 50. Above 50 means that it's good. Below 50 is bad, right? So remember, PMI above 50, below 50. It's important thing, but also not only above or below, but you see the prior months kind of report. If it's increasing from 40 previously and it jumps to 50, that's good. The purchasing managers are starting to have a little bit more confidence, right? If it goes from 60 and it remains at 60, it's normal, right? It doesn't change much. Okay. Yeah, Andre's shared that investing.com has a good economic calendar too. We'll go check it out later. I guess like investing.com economic calendar, this one. Yeah, investing.com looks like there are many ways to kind of filter it. I'm going to send it through to you guys, right? Thanks for the heads up, Andre, right? Go check it out. Yeah, Forex Factory calendar feels often, right? Yeah, I think maybe I should create my own calendar. But yeah, this is pretty nice. Investing.com shows pretty good, probably a lot more comprehensive. FX Daily is also good. Yeah, good stuff, man. I'm glad to see a lot of you guys using it too, right? But okay, right? One of the other things I want to focus on is structural data reports. So structural data reports, right? This kind of give us a big picture, like the macroeconomic data, that kind of depict the longer term economic outlook. So structured data kind of reports to us on whether the economy is like growing or contracting. Whether it also accounts for the speed of this change. So you're better able to derive whether inflation is under control or not. So based on this report, so these reports play a super big important they play a super big part in central banks monetary kind of policies. So the three things that you really look out for is CPI, consumer price index, PPI, producer price index, and PCE, which is personal consumption expenditure. Oh yeah, and GDP too. Okay. Oh, sorry. Right. So I just want to share with you really quickly, like, CPI is what most traders associate inflation with. Go repeat that again. CPI is what most traders associate inflation with. This is because CPI measures the cost of goods and services at the consumer or retail level. So, there are two kinds of CPI. Core CPI, and then just month on month, right? And the normal CPI month on month. So the main difference between the two is the exclusion of food and energy from the core CPI. As food and energy are very volatile factors, so this kind of helps reduce the distortion of data. So you kind of go in and you see, CPI. There's the core CPI, and then there's the preliminary CPI, CPI flash estimates. CPI is important to take note of. Okay, just take note of it, right? Okay. Now, so yeah, Pascal is asking, when does inflation increase, right? That's a good question. It ties in very closely with CPI, right? Because CPI basically, if you want to get it, it's not so much of when inflations will increase generally, but what's the word for it, right? Okay, I'll touch on that later. Okay, I need to touch on PPI and and GDP first. Okay, because PPI is a producer price index, right? It measures the change in price at the not at the consumer level, but at the manufacturer and wholesale level. Okay, so it kind of measures like what companies are charging what companies are charging for goods and services. So it's similar to the PPI. There are two versions. There's the core PPI and the normal PPI. And lastly, there's the GDP, which is super important. Measures the total amount of economic activity over a specific period. It's always over a specific period. So it's typically reported in quarterly and adjusted for inflation. So kind of like monitors. What most people do is they monitor the percentage change in GDP, and you can more or less kind of gauge the economic kind of growth in the country. All right. So when GDP performs better than expected, central banks might be looking to increase the interest rate. But if it's steady or slower, central banks might kind of suggest an easier monetary kind of policy, right? So all of this, like I mentioned, these are the key things that really people look at. Rather, the central bank really looks at to decide on their interest rate decisions, right? Yes, that's right, Ramona. Okay. Let me see the questions that are coming through. Okay. Yes, that's right. CPI go up, inflation go up, right? Or rather, it's not so simple. It's not so simple, right? But yeah, that is an indicator, right? That's an indicator. All right, guys. Now, I do want to let you guys start sending some questions through as part of the Q&A, because I really had to keep a check on time, right? A lot of you guys gave me feedback previously that we wanted to be a little bit more wary of our time, right? Especially when it comes to okay, what Ilman says, which fundamentals has a high impact on gold. So you always from a correlation goal, there's a USD news, right? Risk on, risk off, right? What I call RORO, has a lot of, especially USD has because USD is like the safe haven currency. Yen is also a kind of safe haven currency. Franc is also a kind of safe haven currency, right? These things have a very big impact on gold, because gold is like a safe haven current, the safe haven, right? So yeah, usually those things affect it. So how do you combine the news with technicals on the chart? So I did share with you guys something to watch out for. One handy thing that you can do on let me see. One handy thing that you can do for trading view is you can actually right click settings, under events you can click show economic events on the chart. So you can see when are the big economic news events coming up down here. So if you're on like the 1 hour chart, right, you can see that these are the economic news events that are coming up. You can click on them and you can see what are the news events that are coming up. So yeah, I roughly know like today, what are the big news events that are coming up. It's kind of useful, right? But if you're asking me how I kind of apply it, right? So in this case, right, for pound dollar, I'm expecting pound dollar to weaken, right? So from a technical perspective, pound dollar has broken out of a channel, right? Pound dollar has broken out of a channel, right? It looks like it's going to drop. At the same time, it has broken this area of resistance. If you were with me previously on our Wednesday webinar last week, we were calling for the drop over here. It has dropped very nicely. We're making good money, right? So how far can it drop, right? So if there is good fundamental, if the fundamentals are, I observed the fundamentals and noticed that pound has been weakening and it's getting good news on the US dollar front, I'll have even more confidence. I can increase my risk allocation to here because it looks like price might continue to drop all the way down to here, right? So that's how you combine it from a technical and fundamental. Fundamental mainly gives you the trend, right? The long-term view. Technical can also give you a trend, a long-term view, and then you go into the shorter term time frames to play the move, right? So I don't just sell from here. I wait for price to make a pullback to this pullback resistance, and then I sell, right? So technicals help you get good entries. Technicals help you double confirm the trend of the fundamentals, and your technicals kind of give you an idea of when to take profit. So that's the idea of how you kind of combine fundamentals and technicals together, right? I'm not sure about cryptocurrency being affected by news, right? They are affected by news. Cryptocurrency actually is affected very strongly by technical analysis too, because in the absence of proper news, right, a lot of people focus on technicals for cryptocurrency, right? So yeah, and Elon Musk, Mr. Pump and Dump, right? That is 100% true, guys. Right. So so Juan is asking, how do you identify key levels based on fundamentals? You cannot identify key levels based on fundamentals, right? At least I try to stay out of it. You identify key levels based on technicals, right? And fundamentals, fundamentals is a very, what's the word for it? You read like, okay, GBP is bearish. It's hard for you to say GBP is bearish until where, because GBP is currency by itself. If I say GBP is bearish, right, what do I mean? Is GBP bearish against the USD, AUD? Like, imagine over here we just type GBP. What happens? There's GBP, dollar, yen, Aussie, Kiwi, franc, CAD, Ruby, right? Sing, ZAR. There's all these different kind of, there's all these different kind of currency. So when you're talking about the fundamentals, right? Why it's not easy to just use the fundamentals that GBP is weakening to find the key levels, because there is no key level. You need to find the key level relating to another currency. So GBP, USD, GBP, AUD, right? So that's how you kind of combine both together, find a key level. If you ask me, what is the price of pound? Who can tell me what is the price of pound? Right? Anyone can tell me what is the price of pound now? How much is the cost of £1? Yes, John. It's a good point. It depends on the exchange. Am I talking about pound dollar, pound Aussie, pound yen, pound franc, pound sing? What kind of pound? Right, so it's the same thing here. You cannot just say pound is weakening. What's the key level? You need to compare it with a different currency. Okay. So Nick is asking here, when will this recording be up? I think it'll be up maybe Friday. At least IC Market says it's every Friday, right? Pound index trickier. Pound index, there's depending on how the basket of the pound index was created, BXY. Yeah, it depends on the weightage of each one of it, but you can use it as a gauge, right? It is not that bad. You can use it as a gauge, right? But of course, it's a gauge across different currencies, right? So slightly trickier. I rather you focus on pound. Like you find that one is focus on, like, if pound is weakening, you find one other currency that is strengthening, and you kind of try to play them together. That's the easiest way. Like if for those of guys who are in the World Cup, England versus Germany, right? Most of you guys will be like, maybe it's 50-50, right? Don't know whether England is going to win, Germany is going to win. Both are decent countries, but maybe you'll compare Germany versus Singapore, right? Singapore is a sorry excuse, sorry. But I mean that our soccer team is still, still not as mature as the Bundesliga, as the German, as the German soccer team, right? So if you were to bet, you rather bet is very clear that Germany will win Singapore, right? So you want to bet one strong versus one weak. You don't kind of want to bet two very strong things together, becomes a very 50-50 kind of thing, right? So from a fundamental point of view, right, BXY, taking, like, it's easier for you to kind of look for one good one and one weak one, right, and play them against each other, right? I think pound index might be BXY, right? So oil, yes, is driven by fundamentals. Yeah, there are fundamentals that drive oil too, right? Especially CAT, right? CAT news does drive oil quite a bit. Right, Fabio, I'll look at the 3 missing webinars on IC markets. They have been, so what IC markets have done is that their upcoming webinars, they have updated it a little bit more. Their previous webinars, now they have the little English flags and the Spanish flags, Brazilian flags beside it, right? So you can more or less kind of figure out the languages slightly better. But yeah, they're starting to put up they're starting to solve out their webinars. Okay, so so if you get mixed fundamentals, like any other case, stay out of it. If something's in a range or something, there are enough opportunities to trade. You don't just need to trade whenever news comes out. If you get a mixed idea, if you look at the way I analyze the markets, I just stay out of it, right? But what I do want to encourage you guys to do is just go to this link, right? Go to this link, sign up for tomorrow's session, right? I'm going to send it in the chat, right? Sign up for tomorrow's session, right? It's called yeah, thank you, Murat. Right, sign up for tomorrow's session, live analysis session. Tune in, right? I'm gonna be looking at the markets. We're gonna look at some good calls. Of course, you guys know I'm gonna look at I'm gonna look at the calls that I did nice, a lot of them. Right. So Fabio is asking what IC markets say about a VIP room. We're in discussions, kind of get it up. So hang tight there. I know it's very long, but don't worry. We'll hopefully get it up soon. Right. Thank you, Niall. Right. Yes. Some nice setups for me. Confirm tomorrow, Adam. That's awesome stuff. Pascal, see you tomorrow. Right. And ciao, Azam. Right. And thank you guys so much for tuning in. Right. It's an awesome session. Fundamentals. Right. Back to the basics, but at least help you guys better understand the whole, confusing world of fundamental analysis, right? Thank you guys for tuning in. Ramona, Helen, Josek, thanks again for tuning in. Biggest fan, right? I'll see you guys tomorrow. Pascal, right? Luca, the whole bunch of you guys. Yan Cheng too, right? That's it for me. I need to kind of tune out and you rush off now, right? Oh, it's your first webinar, Ilmas. Awesome stuff. I hope to see you again tomorrow. Tune in. It's an awesome session. We all enjoy ourselves, right? We trade together. It's fun. See me, I'm not running anywhere, but always accountable to you on week after week how our analysis did. And so far, it's been pretty good, thankfully, right? So maybe it's not so good, I won't say, right? But it's been pretty good. And there's no survey today. Don't worry about it, right? Right. What about my poll? Okay, I'm just gonna run a poll, right? So, right. How do you rate this webinar? 1 to 5. 1 being bad, 5 being great. Let me know. If it's 1, 2, 3, let me know how I can improve, right? If it's good or bad, please let me know how I can improve, because every day you see me over here, right? And I'll try to do my best to kind of answer you guys, right? So there's no running away from me, right? And I'm always trying to improve the webinar for you guys. Okay. Thank you, Jitin. Right. Thank you. Nice to see that. We got a good, I guess, like 93% who at least rating 4 and 5. Right. Got slightly more 3% now. Right. Let me know how I can improve, of course, guys. And thank you very much. Right. Thank you very much for tuning in. Right. So I look forward to catching you guys tomorrow. I look forward to catching you guys tomorrow. Okay. Thanks for voting. That's it from me. Yeah, I know it's slightly some of you guys' feedback is slightly more wordy. It's fundamental analysis. Everything is wordy, right? Tomorrow will be more fun. Technical analysis. Tune in and be looking at the markets together. Okay. Thank you very much, Jitin. Thank you very much, Andre and John, Edmund, Niall, Jitin. I will see you tomorrow. Adios. Cheers and peace out, guys. Bye bye. Adios.